Welcome back to the show, and Uwe Jacobs is here. Uwe, first of all, welcome along. Before we introduce you as a property investment specialist, I have to talk about your other passion, which is flying drones and getting pictures. When did all that start?
Thank you for having me, Mike. Well, when did that start? Very recently. As many people, I took an entry into the market with a low-end $100 drone.
Sure.
Lost it.
That happens, doesn't it?
Much to the surprise of myself and others. And I connect the drone to my work, which is property investments, and wanted to provide a better service to our clients. And heck, if I tell people that it's a business tool, I can write it off on text.
So that's always good.
Always good.
Always a good thing to do with us. So, property investment specialist. Now, nowadays, a lot of people have got maybe superannuation funds, and it's sitting in the account and it's making 4, 5, 6% interest. It's not good. You would always say, I'm guessing, to consider going into property. Who would be your target audience for, say, somebody had a $400,000, $500,000 superannuation fund? What would your target audience be? What kind of people would have that?
My great question, thank you for that. It really comes down to horses for courses. Too many people start off with the idea of, I just buy myself a property investment. There's really a lot of things that we need to consider before going into property investments. Things like, what's the time frame that I want to invest for?
Yeah, because it's pointless. If people have got a short term, if they want a short term gain,
correct.
I'm guessing property is not a good investment.
Correct. And, you know, it depends what stage of life you're at. If you are at, let's say, just for the case of an example, 70 years old,
sure,
that $400,000 or $500,000 in your self-managed superannuation fund, I would not invest in property.
Okay.
So horses for courses.
So you say you wouldn't invest if you were that age. Why would you say that?
Because property investment, from our point of view, from our system's point of view, and it all gets back to a system, is a long-term investment. At, forgive me, 70, having $400,000 or $500,000 in my self-managed superannuation fund, I think there's better ways to invest the money. And I'm talking against my own profession
which
here.
Which is really, but I admire your honesty for that.
Well, this is what our company is all about, Mike.
So clearly, as a businessman, as somebody who cares passionately about your clients, you've got the capacity to turn around and say, okay, at the risk of losing a potential client, I'd rather be honest with you. So there's a few of you about, there's not many.
I consider myself to be a dinosaur, Mike, and dinosaurs are just about extinct, but I'm happy to be one.
Yeah.
Our client's interest comes before our interest. You know, people come and say to me, if you were to describe your company with 3 words, I had to think about that long and hard, and those 3 words are authentic, community, and progress.
Interesting.
These are 3 things that are really important to us.
So let's just take another example of maybe somebody in their mid-50s, for example. They're not ready to retire, so they've still got an income going on, but they're thinking, hey, I'm not getting enough investment here, I'm not getting enough return on my savings, because let's face it, the interest rate on savings is not good. What would you advise them to do? And are there parts of the country that are better for investment than others?
Thank you. Great question, Mike.
I know I ask great. That's why I do it.
Absolutely, absolutely. The issue is, again, we bring it down to basics. So we're talking about mid-50s, quite agile, wants to keep on working. There's great things that we can do with property investments. The next question would be, what's your cash flow situation look like? Because we find that too many people get just killed on negative gearing.
Okay.
Right.
So when you say, just for people that don't know, negative gearing is when perhaps the mortgage on a property is higher than the value of the resale. Is that how it works?
Absolutely, you got it in one. We call
not,
that
not bad for a presenter, eh?
Magnificent. We call that feed the dragon. You know, when you got to stuff $100 notes down the dragon's throat.
I had a mother-in-law like that once. Yeah, I really do get it. Yeah,
we don't want that.
Okay.
That's feeding the dragon, is.
So basically, a lot of people ask the question: are they better in Queensland? I'm thinking to invest in perhaps an apartment on the seafront, or maybe just a little bit inland, a 3 or 4 bedroom property. In your opinion, what would be a better investment in the long term?
Generally speaking, and again, it depends on your risk profile. See, too many people go into this whole thing without thinking about it. Generally speaking, we like the old-fashioned house and land. As it is said in the books, God make no more land. This is the scarcity factor. This is where the capital gain comes from.
So it's not the actual property itself, it's so I guess they say size doesn't matter. Of course it does. It's the size of the block that matters.
It does
I'm
indeed.
guessing.
Houses depreciate, land appreciates.
So finally, just I'm getting back to one of the questions that we kind of skipped over. Different pockets of the country, I'm guessing, will appreciate a greater level. We all know about the metropolitan areas like Sydney, Melbourne, but what about if you sort of go further afield, and again I go back to Queensland, are there any pockets there that you would say, yeah, this is a good investment?
Bring it back to strategy. We believe in a balance between rental income and capital growth. There are, of course, areas where there is more capital growth. Now, why are we investing, Mike? Are we investing for capital growth? Are we investing for rental yield? In our view, a balance between the two is great. Now, the money is made on capital growth. And of course, you're absolutely right. There are areas that grow faster and with more certainty, because after all, let's be honest about this is crystal ball gazing. We're trying to predict the future. So, you can, however, do research which makes the predictability very high of getting yourself into the right area. And why not set yourself up for the biggest success that you can have?
Absolutely, nobody can deny that. You, it's been an absolute pleasure. I'd love to talk to you a little bit more, but I know everybody needs a coffee break, so we'll leave it there. Thank you very much for being with us.
Thank you.